What's up, everybody? Dave Bartosiak here, and I've got another chart of the day. As promised yesterday, we were talking turkey about Intel, and here we go. That's what we're going to talk about here is Intel. And I know by the time this video comes out, everybody's going to be obsessed with the Fed and what the cut was. So you guys are in the future. Can you believe that happened? I know, that's crazy. That's exactly the amount of bips I thought that they were going to cut. So there we go. Kudos to me. Anyway, so what's happened with Intel, right? This is a stock that was the chip giant back in the day before competitors like AMD entered the fray. And then most recently, of course, Nvidia, which has just become the bully of the block. Intel on their heels a little bit, trying to play a little bit of catch up. So big move up over 52. Then you get this nasty gap down. And once that happens, you're under that 50-day, and now all of a sudden that becomes resistance for you to try to get over. Now, recently, stock did get through that resistance, but ran out of steam shy of the 200-day. So that's not anything you really want to see when you're a long-term bull. Big run up, and then things get bad. This is under the 50-day. You have an earnings report and a huge gap down. So why did that happen? Well, there was a miss. And the current year estimates went from, or rather the guidance was lowered. Current year estimates went from, something like $1.05, I think, to 27 cents. No fewer than 15 analysts cut their earnings estimates for the year, and that's what happened. Okay. Now, I'm not so worried about all of this that happens before, right? It's in the past. It's not going to help us make any money today. Here's what I want to talk about, is the most recent action that we've seen here in Intel. And what does that look like? Well, you have, after the gap down, sort of established this level as an area of resistance, right? Where shares have come into supply. Gaps get filled. So once a stock actually breaks into this gap, if they have any significant volume, they're likely to fill that whole entire gap. So if you're on the outside looking in, there's a pretty easy setup that you can use. Take a look at the top of this day, 21.98, okay? 21.98, keep that in mind, 21.98. Let's just call it 22, okay? So what you would need to see is a breakout above 22 and a close above 22, right? And that's a pretty darn good entry the next day to go long with the stop below 22 for a nice little risk versus reward trade here. Where did that gap start? Bottom of this candle, 28.89. So you've got 28.89. Look at my mouse drawing skills. Woo! 28.89, the top end of the gap. We're going to call this 22. So if you get decent volume and can buy somewhere above 22 with a stop loss below, heck, we can even call it 21.50. You can get more granular on the day of. You basically go like the bottom end of the previous day's range, go that way. Anyway, but my point is here, let's say you risk 50 cents this way, and you've got $6.89 this way, okay? That's a pretty stellar risk versus reward here. I know these numbers look silly, but my point is that these are the types of trades you can enter that are lower risk, that are nice swing trades with potential upside. Now, further complicating this is you do have this 50-day moving average that's going to come within this gap, right? Which will make for some, intraday action that you will slap it down or boost it up or whatever. We will cross that bridge when we get there. But big picture, that's the sort of trade that investors should be looking for. Now, why did Intel get this sort of big boost the last couple of days? Look at big volume heading into this. Looks pretty nice. Well, there's a couple of things. First, you got $3 billion from the U.S. government, okay, to help make chips for the government. Now, $3 billion sounds like a lot of money. When your revenues are $55 billion, it's not. But still, it's decent, right? At least I'd rather have the $3 billion than not have the $3 billion. And then they expanded their AWS partnership here. They're going to make some more chips for AWS and such too. So you get two major announcements here that help the stock out, right? But it still couldn't help it close above 22. So in the short term, the risk is definitely to the downside. Now, granted, again, FOMC. So there's going to be huge intraday risk here. And we're going to see what happens as the market rolls over. If you get the Qs under pressure coming down, it's going to drag on stocks like Intel, okay? So it depends on what happens here. If the Qs and the rest of chip stocks can start to go up, then that's when you take a look for this entry over 22 to get up into that gap. If they continue under pressure, then you kind of want to wait to the bottom end of the range to start pecking a little bit more at this. And that's sort of my grand scheme play here on Intel. All right, folks, there you have it for my chart of the day. Be sure to follow the author over here on the Zacks.com page. Subscribe to the YouTube channel here on YouTube. Follow at Bartosiastics and come back next week. That's right. I'm going to do it next week. Next Tuesday will be my next chart of the day. So for everybody here at Zacks, I'm Dave Bartosiak, and I will see you after the weekend.